Welcome to Luca is a Billionaire, where the only thing I invest in is your answers.
You start by loading the chart and picking a time frame that matches your trading horizon. 1 hour for intraday, daily for swing trades. Once done, clean the screen, hide extra indicators, and keep price and volume visible so key levels pop. Now take the horizontal line tool and mark the most recent swing highs and lows where price reversed. Place 1 to 3 lines only. These are your candidate support and resistance levels. You're collecting evidence, not guessing. Once you have candidate lines, validate them. Count how many times price touched or rejected the area, and look for consolidation or wicks clustering around the same zone. Make sure to check a higher time frame. If a daily level aligns with your lower time frame line, that level carries more weight. Also convert exact lines into small zones by dragging a parallel box or widening the line by a few ticks. Markets respect zones more than single pixels, so treat them as areas to watch for entries and stops. You finish by defining clear rules. Only enter after confirmation. Price action like a pin bar, engulfing bar, or volume spike that respects the zone. Once confirmed, place your stop loss just beyond the zone and size the position so you risk a fixed percent like 1 to 2% of your account. If the level breaks decisively, flip its role from support to resistance or vice versa, but do not chase immediate breakouts without a retest. Troubleshooting tip: if levels seem unreliable, widen to a larger time frame and reduce noise.
Thanks for watching and please subscribe. It's the best investment you'll ever make.